This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hello, everyone, and happy Friday. I'm Elizabeth Copeland, junior trader here at Verified Investing. Thanks so much for joining us with a weekly wrap up. Now, usually you're used to seeing Gareth, but today is a very special edition. Usually you can check us out 3:55 Eastern on YouTube, Verified Investing, but today we're in Orlando at the Money Show, everybody. Very exciting. And Gareth also joined today by Benjamin Poole, Drew Dosek, and Lawton Ho, some of our best pro investors here. So guys, I'm going to pass it off to you, and let's do the weekly wrap-up.
All right. So first of all, folks, welcome from the Money Show, joined by these guys here. And let's just briefly touch on what the markets did today, right? So we opened, well, actually at 4 in the morning when I happened to get up, I was like, oh, this is going to be an incredible sell-off day, right? You know, futures were down on the S&P 100 points. And then all of a sudden, we got the taco event, right? We got a little bit of a tweet action there, which said, don't worry about 100% tariffs on China. And I think Ally Financial also calmed fears over the potential credit banking crisis. And then the markets, before you knew it, were basically back to the flat line. And I think we're actually green on the day now. I mean, what did you guys make of this? Anything?
Basically, there's little cracks in the ice that are starting to show. If you recall, just 2 weeks ago, we didn't have any fear in the market. We just continued to go up. It didn't matter what stock it was. People were buying it. But then all of a sudden, issues started rising around regional banks, and that's really it. It put more stress in the markets, made people realize stocks aren't going to go up forever. And that's what's really jockeying and going on in the markets right now. What's your take?
You actually had a big sell-off in some of these really high flyers like Rigetti and OKLO and SNDK. So this has been really fascinating to see all these retail investors starting to flood out of these markets in some of these high-flying plays. So it's really good to see volatility coming back into the market.
Trader's best friend, right?
Absolutely. Hopefully it continues.
And I think one of the things too is to mention is that we saw the biggest options volume day a week ago from today when the markets had that big dip, and it tells us, right, that retail is fully ingrained in buying the dip, which for me, and I don't know about you, Lawton, but for me that's a little bit of a warning sign.
Yeah, absolutely. I mean, you could see, the markets start to float up towards the end of the day, but when retail's buying in this much, institutions got to be ready to pull the plug.
Pull the rug. Absolutely. All right, so let's get into the charts on the S&P, guys. We're going to look at our charts now and get involved. This is the S&P today, so again, this doesn't show pre-market in the overnight, but what we can see here is we opened basically flat to negative. Markets were down a little throughout the day, but you can see Friday afternoon, a gentle float up ensues. We have this kind of just classic kind of grind higher throughout the day, and here we are with literally the markets an hour to go in the trading day, and we're actually putting in a little bull flag, which could tell us that we're in for a late day kind of push up into the end of the day here. Lastly here, I just want to show you the daily chart. We've been talking a lot in the game plan every morning that we've been watching to see, will the S&P confirm? Today, early 4 in the morning, I was like, oh, this could be the day. No. They're not ready to let the bottom fall out of this market just yet. And what we can see again, yes, we're still remaining below this key trend line right here. But again, this is where we are currently. We would have to close below here to confirm a breakdown. And I'm a firm believer that if we do confirm, you probably see at least a 10% drop. But that's not at that point. And again, remember, anything in this range here is just a warning sign to be careful, but it is not a confirmed breakdown. Don't get fooled. They could easily get us back up into this level. Now, one chart that I know we're looking at as traders is AMD, and I'm going to kick it over to Drew to tell us a little bit about what he's seeing on AMD.
Now, check out the difference there between the S&P 500, which Gareth just clearly highlighted. We're in a warning sign, right? We have prices coming down from the top, but not here on AMD. And if you look at this chart on AMD, this is in the weekly time frame. I've got an inclining parallel channel, and where's price action? It's right up here at the very top. Now, this isn't a short-term parallel. This has been going back now a couple years. Now, considering what's happened in AMD, the massive gap up and the massive inflow in capital with these new AI deals, I think this is critical to understand. We're at the top ends of this chart. If we do start pushing up on the S&P 500, as Gareth said, and get back above that trend line, then we're going to be heading above this parallel. But it takes an awful lot of energy as well as capital to push price up that high. So while we're in a warning sign with the S&P 500, right here clearly shows 2, this is a warning sign where AMD is. Even though there may be good and a lot of momentum behind it, looks like the time is done for momentum to continue higher.
Now, just a quick question on this. So just to go over what we're saying here is you're right at the top of this parallel, right? And this parallel connects these major pivot points, right? So obviously that's why it's a parallel. You're not just choosing arbitrary lines here. I mean, this is literally the low here of the first bull run, the big correction, the low, the second bull run, and here we are up here. And so the idea is that in technical analysis, we respect the fact that the reversal occurred here and odds would favor some sort of pullback. Do you think this could potentially be like a market top or a top in semis?
It could. It's showing that clearly it could. Now, the one thing where it wouldn't is if we start putting in consolidation up here. Because we've moved so rapidly up to the top end of this parallel, it's unlikely just to continue ripping higher without some sort of momentum building, and that happens during consolidation.
All right, so the next thing I want to do is I want to talk about dividends, right? So we're all kind of looking and saying, well, where could money go if we start to see big caps pulling back, right? And the idea is really we've seen some of these dividend stocks, a Pfizer, they're trading at multi-year, even like decade lows, but they still pay an incredible dividend. But just no one wants to be in these dividend plays because they're not sexy, they're not exciting, they're not going up hundreds of percentage points. But in reality, I think there is an opportunity here. And I want to kick it off to Lawton here to show us he runs the Dividend Trader, which is focusing on dividend stocks. And he's got one here that he wants to talk about.
Yeah, absolutely. So this stock is CL. This is Colgate, so the toothbrush company. Again, not sexy, not an Nvidia, not an AMD, but still a great household name, and it's trading at multi-year lows. Now, what I absolutely love about this chart, and I'm in it in the Dividend Trader service, is we had this beautiful kind of downsloping trend line, right? And then you can see here, we attempted to break above it yesterday. We're unable to close above it. We opened up above it and now are able to see a pushing up. We want to see this thing continue higher, have more momentum, confirm above here, and then we'll look for a higher move. Now, I'm not holding this just for 10% move. This is a dividend paying stock, multi-year lows, a household name. So I want like 20% on this. And if it doesn't come right away, that's fine. I will sit back, slowly accumulate money by collecting these dividends and cash in when the stock moves up.
I love that, man. I love the idea of, if a stock, how many stocks are at their lows right now, and then they also pay you to hold it. In the meantime, it's probably safer than being in some of these crazy high flyers. They're not going to correct 20, 30% in a day or two. It's a great one. All right, now kicking it over to Ben, who's looking at Palladium. You got to tell us what's going on here, man.
So there has been a lot of momentum, not only in the stock market, but in the commodity markets. Have you seen gold, silver, uranium, and now palladium have been ripping to the upside. So what I've noticed on this is we had this price consolidation right here, and the relative strength index kind of stayed pretty neutral. There wasn't a lot of volatility in this commodity. And then all of a sudden we had this nice surge to the upside. We finally broke above the 70 with confirmation above there. This tells me that there's volatility in this and there's likely sellers to come in. That's what happened. Created this nice U pattern, bullish consolidation with this next move higher. But look at what happened. You got up to this $1,600 psychological level. Now it's dropped about 8.5%. And now look, the RSI got up to about 86. So for me, this is signaling that the buyers have stepped out of the way and the sellers can really take this to the downside. So for me, if I'm playing this as a long play, I'm waiting for about a $1,300 pierce, and that's where I'm likely to get into palladium. But overall, I think that this could mark a potential short-term top.
Do you think that this could also signal a top in other precious metals like gold and silver, like a pullback, at least an opportunity?
Yeah, and actually we're seeing that today. Silver was actually down as much as, 5.5%, 6%. Gold had a nice sell-off today. I'm sure you're going to go over gold chart, tell them what you're seeing there. But yes, absolutely, this could mark more of a top in a lot of the commodities.
Amazing, amazing. All right, guys, we're going to continue the fast-paced here. So what we're looking at on this chart here as we look at the Bitcoin action. So number one, this morning Bitcoin was getting smoked. It went down to about 103,000. It has recovered as the stock market has recovered. So that's good, right? We're seeing it act like a risk asset. Down when the stock market was down early, coming back up. Now the bigger issue here is that we are below yesterday's low. Now the day doesn't end on Bitcoin till later this evening Eastern time. So there is a chance for it to recoup. But what you're really watching on Bitcoin here is, can it get back above yesterday's low? by the end of today. If it does, it is not a confirmed breakdown, and ultimately it has a shot to maybe fight back up here. If it confirms, the odds start to shift drastically that the downside is going to come in, which means this 98 to 95,000 level becomes not a foregone conclusion, but probability-wise, the more likely outcome. So again, Bitcoin struggling today, well off its lows, just like the stock market. But one thing to note, the stock market's green, Bitcoin's not green. And that continues to me to show relative weakness, potentially de-risking in crypto, which happens to be riskier than the stock market if you look at on a percentage basis. And that, again, could also be an eventual warning sign for the stock market. All right, Drew, what do you have for us now on Nvidia?
I just want to say I agree 100% with that. Be careful and monitor Bitcoin. It's a risk-on asset. If it's falling, the rest of the markets are likely going to follow too. So here, Nvidia, just as I went over with AMD, we've got an inclining parallel channel, and this is on the weekly time frame, folks. Just as Gareth highlighted, these parallels just don't come out of anywhere. We identify key support as well as pivot levels where these are drawn. You can see right here these pivots, and we had another pivot back here earlier in this summer. Now we're right back up, but what did we create last week? We created a weekly topping tail on Nvidia. If anybody knows anything about topping tails, especially on the top of charts, that's a very bearish signal in the near term. And then you isolate one on the weekly time frame, that carries more power than the daily chart. So where are we finding ourselves now? On the verge of breaking this longer term inclining trend line on Nvidia, which could be key because that could send the stock back down roughly to this 50% area of the parallel, just above $160. That would be one of the first stopping parts. However, since Nvidia is so heavily weighted in the S&P 500, if this stock does come down, it's bringing the rest of the markets with it too.
So tell me something here. We talked about the topping tail, right? So you have your topping tail here on the weekly chart. How would investors know if that gets negated?
Easy, and it's very simple too. All you have to do is watch the candles. Keep that time frame on the weekly time frame, and price has to get back above the topping tail and close on the weekly time frame basis. That would mean on a Friday afternoon. So we're going to have to get price all the way back up here to the top. As you can see today, not accomplishing that feat. So we're kicking the can into next week, but we also have this trend line break that is pushing price down. So it's going to have to really fight through both that trend line and the top of the parallel to accomplish overcoming that topping tail. A lot of stuff, a lot of resistance in the way, which is likely not going to happen in the near term.
So you went over AMD and Nvidia, and both of them are up slamming into resistance with bearish signals. And so us as traders, like none of us know where these stocks could be in a year from now or in 5 years from now.
Correct.
But if we focus on the near term, meaning let's say 1 week to 1 month out, and probabilities, especially for the semis, are that they're about to have a correction move, and that also implies that the stock market likely would, because let's be honest, the semis are basically the stock market. Just market cap wise, it's like 10 trillion of the stock market is semiconductors now.
Right, especially with this AI driven rally, yes, 100%. So if we start deflating there, watch out with a lot of other stocks. There could be great plays too, other stocks that are beaten down where money's going to rotate to, especially at first, but also look at the SMH. It's got a daily topping tail on it that has yet to be negated. So all these signals are starting to pop up, and then you throw in the regional bank issues, it's all starting to make more sense. There's a little bit more fear creeping into the market.
And I think that's important to mention here, guys, is you have regional banks, and banks were at all-time highs until this week, basically. You have the AI trade, pretty much most of them are at all-time highs. And then, like you said, if those start to deflate, money doesn't usually just run away from the market, especially institutional money. It has to stay invested. And so this kicks us back to these dividend plays that are so important to play, because they can actually have big moves when the money rotates, because these are much smaller companies than even they used to be, but especially compared to, let's just say $500 million gets taken out of Nvidia. That's nothing to Nvidia, right? It's a $4.5 trillion company, but to the dividend plays, that could be 20% upside in some of these things. So Lawton, tell us about this one, because this is a pretty cool chart.
Yeah, absolutely. And, this is Starbucks, the popular coffee retailer. And a question that we get a lot here at Verified Investing is, how do you find your levels? So for me, when looking at typical dividend-paying stocks to enter. I want to find something at its lows that are looking for a bounce, and this is where I saw my entry. So I entered over here with the service. How did I find that level? Look at this. There's 2 gap fills right here from the lows of around May, right? And I saw, wow, look at the price. Price was all the way up here and fell 20% in a matter of a couple of months. And I said, okay, guys, it's time to get in. And I love this Starbucks chart here. Where our average is around $80, right? And I'm targeting a move back to around the $100 level. But take a look at this. Similar to Colgate, you had this beautiful downsloping trend line. It's finally breaking up from. Now, if this can get above this pivot high over here, we're likely to see a continued move higher, and I'm happy to hold this, keep getting paid out in dividends, and exit around $100. So I absolutely love this chart.
That's a great one. I love this move just in the last few. Is this the weekly or the daily?
This is the daily. This
so
is the
this
past
is just
couple
a
days,
daily
yeah.
surge up. And you can see it again. Notice how the market has started to struggle a little. We've been having gap downs. We've had a few down days. And stocks like this are seeing money flow. KDP is another one.
Absolutely.
I mean, all of these stocks that have been beaten down that pay great dividends are showing signs of life. So I think this is an amazing opportunity. We talk about how when the markets fall, you don't have to panic and be like, oh, I have to go back to cash. There actually are other places to rotate your money, just like big player investors do as well. And this is a great opportunity here.
Absolutely.
All right, so Ben, talk to us about Rigetti. This is a crazy mover. What the heck's going on?
Okay, so Rigetti. So Drew was talking about AI plays, but there's another play in that a lot in the stock market. Rigetti is a quantum computing stock, and this thing has had a lot of momentum. So you've got this beautiful upsloping trend line that kicks this pivot here, pivot high here, and then finally broke through to the upside. Now it just retraced today. So this is the price action that happened. It filled this gap and had this really nice bounce. So what I'm looking at is if we can maintain this upsloping trend line to the upside, then we're going to target this $56.34 level, which is very possible, especially if the fear starts to get back out of the markets. Risk on assets can start pushing these quantum computing stocks back up. $56.34 is where I'm looking at. Now, if we start breaking this upsloping trend line, you could get price action right down to $35.34. This would be a key technical level. It's a gap fill in the charts. And then when the RSI gets about 50 with these overdone stocks, get around the 40, these are plays that you can play and get 20, 30, 40% in a matter of a couple days. So I'm really liking the chart of Rigetti, especially with this volatility.
So this would be something where you would look at this chart and say, okay, well, if you want to be long, you could be long Rigetti, but you'd want to keep a very tight stop underneath, because 100%. If it breaks 40, looks like 45 or so, it goes to 35, which is a huge percentage move for the stock.
That's correct. Yep. These plays like this, right? It was down on this one candle 17%, and then today it was down another 7-8%. So these things can move intraday. This is about a 10 to 15% move, and that can happen on a regular basis with these smaller quantum computing stocks.
All right, awesome, guys. So we're going to finish up with gold here and silver. Gold pulling back today. Again, we've talked about this, how on the weekly chart you have your 9 weeks up in a row. That mirrors 1979 perfectly before a major reversal took place. This morning in the game plan, if you didn't see it, I went over the pullback target on gold. 3,500 is what basically the equivalent of the pullback was in 1979 before the big move up. So keep an eye on that, but great reversal candle. You wouldn't call this reversal engulfing, but still a great reversal. And then lastly, I know you guys love your silver, so I don't want to miss out on silver. Let's quickly touch base on this. If we look at silver real quick here, we can see silver, this is a much nastier candle on silver, much like platinum and palladium. Reversal here to the downside, big down move. I would look for this to pull back into the 50, well, even tested 50, which was the previous all-time high. If it gets below 50, it's probably headed to 48 and below. I will cover it more Monday morning in my game plan. But that's all the time we have, guys. So again, thank you guys for tuning in to the weekly wrap. Let us know what you think in the comments. Share this with your friends and family. If you like this format, maybe we'll do it again. Have a great rest of your day. Take care.
Have a good one.